We get the show started with market numbers from the African continent, which were mixed at intraday, while Nigeria's main index declined 0.02%. The JSE index in South Africa rose 0.02%. The market in Egypt is closed today for the Liberation Day holiday, but ended Wednesday's session negative by 1.10%. Kenya ended Wednesday's session positive. In the meantime, investor sentiments in the Gulf region were negative at intraday. Saudi Arabia's index lost the most by almost 1%, while the Qatari index lost 0.27%. In the UAE, the Abu Dhabi index declined 0.60%, while the Dubai's index fell 0.56%. And in Europe, stocks advanced today as markets react to the U.S. Federal Reserve's decision to hold interest rates near zero and digest a fresh round of corporate earnings. All right, while we wait to talk to Conrad there, let's look at what's happening in the UK. There's a flurry of corporate news today. All right, let's get a sense of what those earnings are looking like and how the markets are interpreting this at intraday. Juliana talks to us now. Hello, Juliana. Good afternoon. Good to see you.
Welcome back, Chimeze. I can't see you, but I'm sure you're looking fabulous as always.
Well, looking quite relaxed. It's a few days, but it's good. All right, well, a couple of earnings were released today. NatWest Bank returning to profit, energy giant Royal Dutch Shell growing its earnings, and betting giant Flutter posting a 33% jump in revenue last quarter due to the surge in online gambling. What strikes you most in these earnings results?
Yeah, it's been a really busy corporate day, which started off, of course, overnight on the New York Stock Exchange with those big tech updates from Apple and Microsoft. And we had the same here. I suppose the big one, of course, has got to be about the oil tycoon Royal Dutch Shell returning to mega billion-dollar profits in Q1. The main headline being is that they're going to increase their dividend payout by 4%. Lots of investors, of course, happy with that decision. And then there were the tale of two banks, one being Standard Chartered. They released their first quarter earnings showing that they've returned to profit, just similarly to what we saw with HSBC earlier in the week. They're both big Asia-focused banks, and we do know that Asia, of course, returned to growth much more swiftly than it did in the West. So Standard Chartered doing really well there. Then, of course, as you just mentioned, NatWest, state-owned, well, partly state-owned. I believe the taxpayer fund about 60% of NatWest, formerly Royal Bank of Scotland. They've had a mega Q1, just like all of the other banking updates we've seen over the past couple of days. Their credit impairments have gone down dramatically, and that's because this time last year, Chimmy, a lot of these big banks set aside billions for impairments because they were concerned that a lot of these government-backed loans wouldn't be paid back by the consumer because they were going through such a tough year. But as we've seen, a lot of these subsidy schemes have been a huge success, which is why the labour market here in the UK has stabilised. Therefore, people are paying their bills and their loans back on time, which is good, and they have reduced their impairment costs. Do have a little statement, well, not a statement really, just a sentence from NatWest Chief Executive Alison Rose. She says there is reason for optimism purely because we've had such a successful vaccination drive here in the UK, which means we are on task to get out more. Also as well with NatWest, they are a huge retail lender and a mortgage lender. Mortgage approvals are through the roof at the moment because we know that the stamp duty has been removed, and there's this 5% mortgage which the government is also backing, so that's really boosting the housing market, and the banks are reaping the rewards from that.
And still talking about the corporate earnings there, Heathrow has fallen deeper into the red as the COVID-19 pandemic continues to hit the travel sector. Now, the government is talking about vaccine passport. How will this help the UK's largest airport and support international travels going forward?
Yeah, well, Heathrow continues to suffer. They also had their quarterly update showing that they lost over £320 million in the first 3 months of the year. Passenger numbers are down 91% if you compare it to this quarter in 2019. Their boss has been doing the rounds on the media, not happy. 2 reasons, really. One of them is because just a couple of days ago, the Civil Aviation Authority rejected a pledge or a proposal that Heathrow bosses put in asking if they were able to rise passenger costs by 10% over the next couple of years to try and claw back this £3.4 billion that they've lost since the beginning of the pandemic. That was rejected by bosses overwhelmingly. A lot of people are not happy about that. And then moving on to what you were talking about with this vaccination passport, which, especially in Europe, it's been mulled over for about a year now. The Transport Secretary, Grant Shapps, has confirmed that, yes, if you are living in the UK and you've got an NHS app, I definitely have one. Most people do have them because if you're going into any hospitality zone, you have to kind of scan where you are for track and trace. Now, what will happen is if you have received your 2 doses of vaccine, it will be uploaded to this NHS app. And a lot of people have said they've already seen that happen overnight. And you can use this to travel. Now, he'll be chairing a meeting next week with G7 transport ministers to try and ascertain how this is going to work across the globe. But going back to Heathrow, there are concerns about how this is going to work, because even though passenger numbers are down, people are having to wait about 5 or 6 hours at the border because it's completely unstaffed. Of course, there are so many bureaucracies at the border right now, so many forms you have to fill in. So they want the government to give more information. Next week is May. May the 17th is when international travel, the ban is going to be lifted here in the UK. So they just want to make sure there are checks in place at that time.
I will keep tracking that and see how that goes. All right, let's check with the intraday market numbers. How are the equities reacting to the earnings, and how is the sterling doing?
Yeah, it's a good day on the FTSE All Share. Of course, it opened up in positive territory, and this is because of that, record-breaking number we got in from Apple overnight. That really improved sentiment here in Europe, showing that tech is still very much alive and kicking, as we all know, because it's been thriving through the pandemic. So the FTSE managed to break through that all-important 7,000 points mark, and they've stuck onto that. They've held on with a firm grip at intraday. The FTSE All Share is up 0.63%. The FTSE 100 is also up by 0.71%, and the FTSE 250 is up by 0.26%. This has had a knock-on effect on the currencies market because the British pound is now down against the US dollar by 0.01%, slightly up against the euro by 0.03%, and up against the Japanese yen by 0.40%, Chime.
All right, let's keep tracking those earnings there and, of course, the numbers, and we'll talk more tomorrow. Enjoy the rest of the day, Juliana. All right, let's get back to Europe, where Conrad is all set to talk to us now from the Frankfurt Stock Exchange. Hello, Conrad. Good afternoon. Good to see you.
Good afternoon. Hello from Frankfurt. It's great to be back.
Right. So looking at Lufthansa, Germany's largest airline, of course, that company presented its first quarter 2021 earnings. This comes after a 60% loss in revenue last year. Now, many people working for the airline were sent on part-time or short-time work schemes. How are the numbers going down on the trading floors of Frankfurt?
Well, investors are not particularly happy with these numbers. The share price of Lufthansa has lost some ground this Thursday during trading here in Frankfurt. Of course, nobody had really expected an overwhelmingly positive number, but a little bit more of a positive outlook might have been appropriate. In terms of finances, Lufthansa is, in small steps advancing towards a future without the state being large owner of a chunk of the airline. Lufthansa is planning to come out with a new corporate bond. It also wants to pay back a loan it has gotten from KfW, our state-owned development bank here in Germany. Lufthansa, of course, now is getting its staff back into work again. The part-time and short-time work schemes are being transferred towards, more normal, regular schedules. For these employees, that, of course, also is costing Lufthansa a lot of money. They're negotiating with the unions so far to no great success.
And looking across the Atlantic, the U.S. Federal Reserve has made it clear that money supply will continue to be generous as President Biden beats the drum for his $1 trillion support for the American economy. How about Europe? How are your help programs going?
Right, they go okay, I would say. Rome, the government in Italy, has just provided all the paperwork for a lot of the projects where it wants to use the billions of euros it's getting from this recovery fund. Germany is getting 26 billion. Lots of these projects, of course, all of these projects have to do with the future, with greener management of things, with something that is supposed to be sustainable. That is where the green structures of the future are being applied here. Of course, a lot of money is at stake. A lot of money is being paid by the German taxpayers, but the German taxpayers also getting something back, and that's positive news.
And on data front, Germany's unemployment figures are up in April. The rise was unexpected. So what's responsible for this rise? Meanwhile, there's also the flash inflation data. What does it say?
Yeah, the flash inflation data just came out a couple of seconds ago. It looks like we are going to... I have to just press a couple of buttons so that I can get you these numbers.
Please go ahead, Conrad.
So the inflation is out. But also, you mentioned the labor market. That's really important. We don't have inflation yet, I'm sorry. But the labor market development, I can give you. The unemployment rate is now at 6%. That's pretty positive for a market in the middle of a pandemic. We also have the number of employees being up. We now have unemployed people, 2.77 million here in Germany. So it's not a big deal right now. Of course, it has to do with all the state support that the labor market gets.
Yeah, perhaps they'll get more and things will get improved. All right, thank you very much, Conrad. I hope to see you tomorrow.
Yes.
And today on Commodities Market Update, we're talking fertilizer. Based on a survey by the Federal Ministry of Agriculture and Rural Development, 80% of the land used in Nigeria is deficient in key elements such as nitrogen and phosphorus. And now to address this deficiency, the fertilizer industry in Nigeria has been dependent on import and local production of different types of fertilizer compounds to meet the domestic needs of farmers. However, it is believed that the fertilizer industry in Nigeria is a tightly controlled oligopoly. Well, joining me now to talk more about this is the head of Treasury at financial derivatives company, Juliet Adenuga. Thank you very much, Juliet, for joining us. Good afternoon.
Good afternoon, Chimeze. Thank you for having me.
So with the imminent commissioning of the Dangote fertilizer plant this quarter, do you think that the massive increase in supply and shift in aggregate supply curve will result in a sharp drop in the price of fertilizer in Nigeria with a consequential impact on the general level of food prices?
Thank you for having me. Bearing in mind that fertilizer is an oligopolistic market, a market that has few players as suppliers, it makes it possible for them to be able to take full control of the market. For the Dangote the Dangote fertilizer plant, it's been established that the plant has been built and completed. They're having skeletal production, just running with their products in the market presently. But it's at full commissioning and at full capacity. It's going to be adding about 200% to the production in Nigeria already. We are producing about 1.5 million metric tons of fertilizers, while we need about 5 million metric tons. At this first stage, Dangote is planning to add a 3 million metric tons, which is very massive. This is definitely going to lead to a shift in the supply curve. It's not like a movement along the supply curve that is caused by price changes. This is major, that is going to cause, it's brought about by a change in technological processes, in production process. So it's going to bring an influx. There'll be an increase in the production and the supply of fertilizer in the markets. It will fundamentally lead to a reduction in the price of a unit, a bag of fertilizer to farmers. Because when there is an increase in supply, when you have an increase in supply, fundamentally the price of the product drops. And if the price of fertilizer drops, it's going to reduce the cost of production for farmers, which is very much needed for the price level to drop. So this is just like a chain. It's going to bring about influx in the market. It's going to bring down the unit price of fertilizers. Cost of production is going to come down for farmers, and that will affect the price of food. It's going to bring about a reduction in the price of food. That is what is expected.
Now, in the last 12 months, the price of NPK fertilizer has jumped by about 50% to about 9,000 naira per 50 kg bag. Now, this comes at a time when food inflation has soared to almost over about 23%. Now, since the demand for fertilizer is derived demand from crop commodities, can you explain why the average price of this input is approximately 2 times the price increase of the general food basket?
When you talk of derived demand in economics, the demand of a product brought about by the demand of some other intermediates or finished products like fertilizer, the demand for rice, yam, beans, and other agricultural outputs that fertilizer aids in their production leads to the demand of fertilizer. So when people demand more of rice and all other foodstuff, the demand for fertilizer is needed both in output and the quality of produce for farmers. So now with this on ground, we have an issue. Last year, there was a little support by the government for the provision of a particular blend of fertilizer. This year, that support is not there at all. Farmers are just finding their way on their own. But we have to also bring into bear here the fact that fertilizer, just like every other produce, has middlemen in the distribution channel. And we know what middlemen can do. In the case of fertilizer over the years, because of the support of government, middlemen have taken advantage. And instead of making it available to local farmers, they prefer to export and make foreign exchange earnings from there. These have caused a consistent scarcity for fertilizer in the but this is supposed to come to an end, because with the entrance of Dangote fertilizer now, there's going to be no market for smugglers, because the people they are smuggling to, Dangote has access. He already has a distribution channel in exporting of things like cement in the region, in African regions. It will definitely affect that too.
All right, Juliet. Now, with the ratification of the AFCFTA by Nigeria and, of course, the global cost competitiveness of the Dangote fertilizer relative to other producers, what are the export prospects of Nigerian fertilizer at this time when the country is emphasizing on non-oil exports to diversify earnings?
Okay, for you to export, there are 2 things that should come to play. Your price, how competitive is your price, and then the markets. For this fertilizer in question, it's very favorable. It's oligopolistic. There are few players. Secondly, because of the cutting-edge technology, it's going to come out at a very, very reduced price. And it will be very difficult to meet this price. So in the international market, it's going to be very favorable. Now, it's also established, and it's a fact that Nigeria has signed the African Continental Free Trade Agreement and ratified it, and it's part of it. So there's no barrier to trade. We are free to export as much as we can and foreign exchange and improve the naira. Presently, it's established, or maybe adjudged, that there's going to be a kind of retaining of up to $125 million in terms of import substitution from these exports, and about $625 million will also be retained from the produce from these plants. So it's a free ground, and it's open, and it's going to support the export diversification policy being pursued by the government. A little bit diversification from oil. Let's also see what we can also benefit from this availability we have with the fertilizer from Dangote.
All right, thank you very much, Juliet, for your time on the program. We do appreciate it. Enjoy the rest of the day.
Thank you.
And the Monetary Policy Committee of the Central Bank of Egypt has kept the overnight deposit and lending rate the rate of the main operation and discount rate unchanged at 8.25%, 9.25%, 8.75%, and 8.75% each. According to the MPC, the decision to keep policy rates unchanged is consistent with achieving the inflation target of 7% on average in the fourth quarter of 2022 and price stability over the medium term. The MPC clarifies that the annual headline urban inflation stood at 4.5% in March and February 2021 from 4.3% recorded in January 2021. The committee attributes the stabilization in headline inflation to the combined effect of the higher annual contribution of food items and the lower annual contribution of non-food items. And in South Africa, the Reserve Bank has announced that it will implement AC debit check payment system from May the 1st in an effort to modernize the payment system in the country. The project aims to address the increasing levels of abuse in the debt order payment system known commercially as the early debit order payment system. And in Ghana, the Registrar General's Department has begun an overview of its business processes to map out a new modified system to improve the online registration of businesses in the country. According to the Registrar General, the exercise, which involves a step-by-step overview of all the current processes for registration and dissolution of businesses in Ghana, will translate into the development of a new online software for businesses and company registrations. And that's it on the program. Thank you for watching. I'm Chimeze Obi Uwagu.